Welcome to TradeDBI.com. This is John. This report is for June the 1st. Well, we're continuing this back and forth right now as we've been in this, beginning weakness here that developed with the start of this DOC spread here. And pretty much has remained. We haven't seen a reset. You don't have any of the crossovers that you'd be looking for. But we did have the gold rising from back over here. And typically when that happens above the 50% line, you expect the highs to be reached. Now, the highs, obviously, in this case, from our Fibonacci lines here, have been falling. So what's likely to happen is we're just going to meet the high because there isn't a whole lot of range right there up to 2750. But the shakeout's improved, and we're starting to see a turnaround. We'd have to see a little bit more improvement from this yellow to expect anything. We're at the start of the month. Early next week, we will have more fund money coming in, so that will give us a clue as to whether or not those added buyers are going to elevate us to the next level, which would certainly take us above that 2750 range. What we're going to look at here, though, is this extreme, and we're not seeing any dips below the red one. This tends to be very bullish above the 50% level here. So all in all, despite the sorry-looking DOC and the continuation mode, in this particular case, continuation sideways and up, because that was where it was leading off of when it began, but just hasn't produced a whole lot. And that's okay, but it's giving really nice ranges intraday. There's no question about that. The NASDAQ has been the real powerhouse, and you can see from that same consolidation, the NASDAQ actually has done what the ES hasn't been able to, and that is to reach the top of that Fibonacci right there, the 100% reading, just a little shy of it at this particular point. But it's been a lot healthier, and the shakeout reflects it from always being positive and making the turnaround quicker. And that certainly helps the S&Ps. Just a little bit of a lag. Now here's the euro. The bounce, obviously, with the formation of the Italian government. Of course, it is a Eurosceptic government, as they like to describe it. They did give up on some of the more traumatic individuals that might have created more turmoil, but that doesn't mean that it's going to be a piece of cake for Euro or the economies of Europe, and that it becomes a question as to who they think is weaker. Overall, the guesstimate is that the European Union is a little bit weaker than the U.S. growth, so though you're hearing this clamoring of the U.S. Stalling out. Here, it's interesting on the extreme, already getting to the yellow at below the 23%. That's likely to fail. Worth noting. This craziness here with the TLT back up at its peaks. This flight to safety for not that much yield. And oil holding up after having filled up some of these positive exchanges. We know that we had to retest the lows back over here. Could do that very easily. Not really a factor at this particular point. We already knew about the inflationary items that were going to be reflected in it, but it hasn't produced too much, and that easing isn't going to be enough to affect the summer situation. So it's already going to be built in. We're looking at the end of the year before that has, which will be interesting because that's going to be towards the election for Congress, and that coming into the second half. And gold not responding. Now the 5K, we had all sorts of action. Gotta shrink this way up because it was a pretty hectic day. Started back over here up at the peaks again, that same, I haven't moved that 27 3/4 that was up there. We had that confluence, and then we started to break down. The DOC spread happened quite early, was right in there. And then it progressed when the green and cyan kind of met there, but when they broadened that opening, the mouth of it right there, along with it being a snake because you had the orange over steel and the cyan in the middle, and that just produced the dump that took us to the zero line, and we just traded pretty much along that zero, pretty much the other thing, and then we got a gold set up oddly enough, below the 23%, well, you know that's a failure going to happen, and that's just exactly what it did right there. And it's funny because we get the exact converse effect. If I increase this now, you can see this clearly. We ended up with a gold closing over the 50%, and that took us exactly to the 100%, but all the red dots with the yellow right there indicated that we were going to have a pretty solid retrace within that, and it didn't take long for that to happen. We started right here in DOC spread up at the 76% line, and that proceeded to take us well below the 50, and we had the mean that would have closed the length of the short right there, but it was rejected to the downside. So again, even within this range, but right around the 38, you had the breakdown, which took us to the new lows. And then as soon as we get to the new lows, boom, white candle. So right after the white candle, we get the blue, and of course it makes yellow dots, so that became a short opportunity for a retrace. This is the tougher one because it's not that big a distance from the high down to that 203, so it was about, just under 4 points, and which isn't bad. And it came down and filled that all the way in pretty good, and then continued its rise off little higher shakeout peaks there. It was nice, right to the 50. And then when it started to come back down, it should have come all the way back to that, let's see, this close was 203.50, and it only made it back to 204, and of course, quite a bit of strength. And then it started to process across that all in the gold below the 50, so it should have suffered a little bit more weakness, didn't, and continued to build strength. So there's just a lot of buyers just continually going through there, and the shakeout finally broke out, and once it got above the 50%, boom, it took a straight. That's where we're at right now. That doesn't mean that we still aren't coming back to this level. It just means it was a temporary pause in how that's happening. So we'll wait for that one to develop a little bit more. You can see there's already series of positive extremes here in the pre-market that, it's going to take us all the way back to the lows right here, 2712 range. This may will pop up a little bit further first. It's early enough that we'll do it. And you have the start of the new month, so people are going to be rotating into a variety of different things, so it should create some more volatility again, which can't complain about that. As always, though, trade well. If you didn't renew your indicators in that, be sure to get that in so that you don't miss much of the action. That selling may go away theory that a lot of people subscribe to, I think may give them some grief, because this could be pretty active summer with a lot of different things happening. So very excited about it. As always, trade well. We'll talk later.